Good morning friends, welcome to The Point. I hope all of you are studying well and revising the videos properly and have got some clarity about what economy is, what are the topics of economy, and how the things are connected to each other in an economic system. Talking about the today's video, we will discuss about the Basel Norms, and these norms are related to the banking regulation and were launched with the view to strengthen the banking system. So we will quickly start with the topic, that is Basel Norms. So Basel Norms or Basel Accords are the international banking regulations issued by the Basel Committee on Banking Supervision. So these are the norms which were issued by whom? That is the Basel Committee on Banking Supervision, often called as BCBS. Now what is this BCBS? We will discuss in the upcoming slide. As of now, what you need to know is these are some set of regulations to regulate the banking system issued by whom? That is BCBS. It is an effort to coordinate banking regulations across the globe with the goal of strengthening the international banking system. And the objective behind launching these norms was to strengthen the banking system worldwide. Now friends, as you know that banks are the pillar or the backbone of any country. So the banking system has to be really strong if the economy wants to prosper, because banks acts as a financial intermediary which channelizes the money from the firms which have surplus to the firms which are in need of money for their personal use or the expansion purpose. So for any economy to prosper, the banking system has to be really strong. Any problem with the banking system will have an impact on the economy level as a whole. So to strengthen the banking system, these norms were introduced. Now what is this Basel Committee on Banking Supervision? So first of all, one thing I forgot to tell you is that Basel is what? Basel is a city in a country called as Switzerland. Not many of you must be knowing, but yes, it's a city in Switzerland. Now this committee was formed by whom? There was governor of G10 countries. So governor of what? Central banks of these G10 countries came together and decided that we should form a committee which would introduce or regulate the international banking system, and the committee was called Basel Committee on Banking Supervision. This was in response to the disruptions in financial markets. So time and again, financial markets of the world have faced many disruptions, due to which there are fluctuations or the deep depressions caused in the global economic or the financial system. So in order to avoid such situation, this committee was formed which would regulate the international banking system. The objective of this committee is to strengthen the regulations, supervision and banking practices globally, not just in these countries but globally. The committee was expanded in 2009 to 27 jurisdictions, and then the India was also included in the expansion. In this context, RBI is overseeing the implementation of Basel III norms. So who oversees the implementation of Basel norms in India? It is the central bank of the country, which is RBI. And this committee was also formed by the governors of the central bank of various countries, that is G10. To the next slide, which talks about the timeline. So friends, there are 3 norms that have been introduced so far, and there was a timeline of implementation. Now again and again, the norms were introduced with the changing pattern in the economic system and with the changing need of the society and the way of doing business. So there were 3 norms that are issued so far. So the first one was published in 1998, second in 2004, and third was in 2010. So our focus would be discussing more of Basel III norms because these are the latest ones and are of late in the implementation phase in India as well. Now why this third one was launched? Because in 2008, as you all know, the world suffered from, or the world economic system suffered from the subprime lending crisis that started from United States of America. So then thereafter a need was felt to further strengthen the banking system in developed countries where banks were undercapitalized, over leveraged and had a greater reliance on short-term funding. So what these banks of developed countries was doing, they were taking the short-term or accepting the short-term funds, whereas the loans they were extending was for long-term periods where the money got blocked for say a longer duration of time, whereas the source of funding was of short-term nature. So that created a fund mismatch in the banking system, and led to the subprime lending crisis. So in order to avoid such situation in future, these guidelines were again revised and published in 2010. The guidelines aim to promote a more resilient banking system by focusing on four vital banking parameters, that is capital, leverage, funding and liquidity. So the focus were enhanced in these core four areas, that is capital, leverage, funding and liquidity, and we will learn about them one by one. Moving on to the next slide, which talks about the three pillars of Basel norms. So Basel 3 was introduced with three core pillars of it, and pillar 1 talks about enhanced minimum capital and liquidity requirements. So this pillar talks that the banks have to enhance the minimum capital that they used to maintain earlier, and this minimum capital would be there to cover three types of risk that a bank faces. So there is market risk, there is operational risk, and there is credit risk. So these are the three major sort of risks that a bank faces. So whatever the capital or the minimum capital the banks were maintaining earlier, it has to be enhanced. So the first pillar talks about enhanced minimum capital requirement that would enable banks to cover the three risks that it faces. Pillar 2 talks about the enhanced supervisory review process for firm-wide risk management and capital planning. Now this talks about that the banks have to maintain adequate capital. So it revolves around the capital adequacy that the bank has to maintain in order to cover all the risk associated in their businesses. So pillar 2 talks about that. Now pillar 3 is related to the increased transparency of the banks. Now banks have to being more transparent to the investors and to the public, so in order to protect their interest or the confidence in the banking system. So it talks about enhanced risk disclosure and market discipline. So they have to be in align with the discipline that the market follows or the market regulatory norms prescribe. So these are the three basic pillars of the Basel 3 norms. Now the next question that should pop up in your mind is that which Basel norms is being followed by India? Is it 1, 2 or 3? So as you must all be thinking that is the Basel 3 norms that are being currently followed. So friends, no, Basel 3 norms are yet to be implemented in India in a full-fledged manner. Right now the banking system follow the Basel norms 2. Basel 3 norms standards were finalized in December 2017 and the timeline was given for implementation. But with the country facing the heat of coronavirus pandemic, this time for implementation of these norms have been deferred by 1 year to January 1, 2023. So friends, whenever such big changes are to be brought about in a financial system, generally it is given a timeline or some time to implement it, because such changes cannot be made overnight. Lot of money is required to match these norms to maintain certain capital reserve requirements as prescribed by these norms. So this changes cannot be happen in overnight situation. So banks are given a time in which they have to arrange a capital and adhere to the norms. So in India, the implementation time has been deferred till January 1, 2023, and after that these has to be strictly followed as instructed by RBI. So friends, I hope it is clear to you that what is Basel all about. It is a city in Switzerland where this Basel Committee of Banking Supervision was formed, and the reason for forming is to make the banking system more resilient. There are 3 norms that have been published so far. The third one is still in implementation phase in India. The questions that are asked in exam revolves around the 3 pillars of the Basel 3 norms. What are these? And who regulates or who implements the Basel norms implementation in India? It is the Parliament or the President or the Governor or the Home Affairs Ministry. Many options are given, but you have to be very sure with respect to that it is the central bank of the country that oversees the implementation of such norms in the country. So friends, this is all for today's video. Stay home, stay fit, and thank you so much for your patience listening.